Hello there. Gold price is stalling a little bit around 2650. Does it mean that gold is running out of steam here? Well, let's have a look at the outlook. But first, let's talk about the cycles. Generally, asset prices do like to follow cycles, mostly driven by sentiment, where at the end of one cycle or the beginning of the next cycle, the cycle low, the sentiment is down through the floor. Nobody is interested. Anyone that could potentially sell has already done so. Hence, there aren't many sellers left on the market, meaning that the price is more likely to start moving higher rather than significantly lower. That starts a new cycle rally. Smart money usually are the first to jump in, followed by the rest of the crowd and the latecomers near the end of that rally when the sentiment is extremely high. That is, everyone is really excited about a particular asset. Your taxi driver is telling you how he's made money on be that Nvidia or Bitcoin prices. Everyone who could potentially buy has already done so, hence there aren't many buyers left on the market, meaning that the price is much more likely to move down rather than significantly higher. That's how we start a declining phase of the cycle. With everything working in reverse, smart money would get out first. As the price continues down, the rest of the crowd joins in selling, which accelerates that decline down into the latecomers at the end of the cycle. When the last holder of that asset throws in the towel, there are no more sellers left on the market, and we're back to where we started this description of how cycles work. And similar sort of dynamic could be observed on a range of time frames, either very long, say 4-year cycles on the general stock market, intermediate term cycles as here, the half-a-year cycles on gold price, or perhaps shorter term daily cycles that we see within these intermediate cycles on gold. Each of these intermediate cycles has on average around 3 daily cycles. The tricky part about cycles and actual application of this knowledge to your investment decisions is being able to identify those cycles, which is partly science, partly art. And in my experience, there are several signs that I'm looking for in trying to identify those cycles. For example, as these relate to gold price, we're looking for a multiple pokes below widening Bollinger Bands, either down into the cycle low or up into the top of the cycle. We're also looking for the price to break below the 50-day moving average for a multiple number of days. On the RSI, dropping down into the cycle low, RSI moves by well over 20 points, slicing through the midpoint, and conversely rising by well over 20 points into the cycle top, again slicing through the neutral level at 50. And another very important sign that we look at in relation to cycles is that they usually form some sort of a typical duration, which is around half a year as it relates to intermediate cycles in gold. Now, zooming into what has been going on over the last several months. As I mentioned, identifying these cycles is actually the tricky part. Hence, we've had this question mark around the end of June in several of our videos, questioning whether we had seen the intermediate cycle low or not. After all, this decline from May into late June was relatively mild. Yes, RSI has dropped by well over 50 points and it has sliced down through the neutral level. And yes, we've seen the price below the 50-day moving average for at least a week. Nevertheless, the decline was, as I said, relatively mild, and while price did poke below the Bollinger Bands, the bands were pretty narrow. Usually poking below relatively wide Bollinger Bands is what counts. Additionally, that decline implies a relatively short intermediate cycle lasting for only 133 days. Since then though, the rally into a new intermediate cycle has cleared out the question, so I'm gonna delete that. And we are now 104 days into a new intermediate cycle. We are in the second daily cycle of this ongoing intermediate cycle, with the first daily cycle lasting from late June into somewhere around mid-August. Now for the second daily cycle, it's relatively long already, lasting for 62 days. Usually the duration of these shorter term daily cycles is about a couple of months for gold price. But there are multiple examples historically when these daily cycles stretch to last for around 3 months. Looking at price versus Bollinger Bands, we have seen the price poking above the Bollinger Bands, More importantly, what we're actually trying to look at is repeated pokes. We have seen those repeated pokes. RSI has reached well into overbought area at around 78. Technically though, the formation does look a little like a bull flag. So comparing this formation to what's happening to the dollar index, we see dollar rallying significantly all over the last week or so, while gold price is stubbornly stuck above 2640. And while eventually gold will have to decline down into the short-term daily cycle low as well as the intermediate cycle low sometime later on, in the short term though, as dollar is likely to retest the breakout of this 50-day moving average, it is very conceivable that gold will have one more push higher within this ongoing daily cycle before coming down to perhaps test the 50-day moving average, one more bounce into the last daily cycle, followed by a more significant decline down into the intermediate cycle. And with these daily cycles lasting for an average of around a couple of months, that neatly brings us into December, tax loss selling, where seasonally gold does give us a nice buying opportunity. So with this outlook in mind, while I do have a variety of precious metals related assets that we discuss in detail with the members at myfinanceteacher.org, with some of the most interesting and consequential of those precious metals related assets are the junior developers with a cushion in terms of resource in the ground and an outstanding potential for a re-rate. With the rest of the assets though, particularly with GLD, what I would probably do is place a bit of a stop loss below this recent low to get out of at least GLD if gold price does decide to go down temporarily into that short-term daily cycle low. And looking at the miners, GDX might actually be foreseeing that, hence a decline nearly all the way down to the 50-day moving average over the last week or so. On GDX, same as on gold price itself, we see the previous daily cycle low around early August, when GDX poked below the 50-day moving average and below the Bollinger Bands. GDX is of course more volatile than gold price itself. Around that same daily cycle low, gold price only retested the 50-day moving average and only came close to poking below the Bollinger Bands. So while GDX is already close to the 50-day moving average, if gold price does go down into the daily cycle low, there is a potential for GDX to give us another poke below the Bollinger Bands, at least testing this mid-cycle low or the half-cycle low around 36.3. But remember, that's only the very short-term outlook. There will most likely be another push higher into the third daily cycle of this ongoing intermediate cycle before a more noticeable, more painful correction down into the intermediate cycle low. Who knows, this next push higher into the third daily cycle might actually give us a noticeably higher high on gold price. This is what the chart tells us. Next, let's have a look at the market sentiment on gold. After all, it's the market sentiment that mainly drives these asset price cycles. Zooming out, we see that on gold price, during the good times, as in say second half of 2019 all through 2020, the intermediate cycle tops are accompanied by this optimism index somewhere around the level of 80, with the intermediate cycle lows accompanied by the optics level somewhere around 50. Whereas during the hard times, as in let's say 2023 or in 2018, the early part of 2019, even the intermediate cycle tops are accompanied with the optics levels somewhere in the mid-60s. And what we see most recently, about a couple of weeks ago, optics gave us the top at 84. That's pretty high. So while there is a pretty good chance of another push higher as dollar retraces a little down, on the other hand, it's also very likely that we are in the vicinity, perhaps within 1 or 2 weeks, of this daily cycle top. So at least a short-term correction on gold price is likely over the next several weeks. And in case if you are interested in silver, here's the optimism index on silver. It's also approaching 80 at the moment, but it isn't as high as it was back in late May. So silver does have some catching up to do. And there is that potential of silver moving somewhat higher in the very short term. But this is not the time to go all in. The market sentiment is already relatively high. That is all for now. Remember, this is only my opinion on the outlook for gold, GDX and silver. And as nobody does actually know the future, I am curious in your opinion. Let me know down in the comments below, do you expect gold to retest say 2500 sometime into December? More importantly, for the most promising junior miners, make sure to join us at myfinancesteacher.org. Have a terrific Tuesday. Bye bye.